For more on this, we're joined by Zaheer Anwari in London. He's the CEO and co-founder at the Revacy Fund. Welcome to TRT World, Zaheer. Now, oil prices are pushing higher once again. How significant are the latest developments in the Strait of Hormuz?
For having me. So I guess what we're seeing is this continued uncertainty is happening in the Strait of Hormuz. One minute there seems to be resolution, then it's off, and seeing these sort of natural swings in oil prices as we go through this period. And even if the Strait of Hormuz does open, how open will it be? A fifth of oil goes through the Strait of Hormuz. One's talking about certain restrictions on vessels. So there's still a lot of uncertainty around what's going on there. But in the meantime, all we can deal with as an investor, as you said, I have a hedge fund. As an investor, I'm looking for a sustained direction in the market. And at the moment, it's just, we're just dealing with swings. So it's very difficult to take a position.
Meanwhile, the sell-off in Asian tech stocks continues. The Kospi in particular has been the hardest hit. So why is it leading losses despite such a strong first half to the year?
Well, I think what we're seeing is just basically a natural rotation out of the tech market after a very strong first half, as you mentioned. And, the indices are weighted. So the Korean index is particularly weighted towards Samsung and SK Hynix, I believe. So, when these heavier weighted stocks are going through some sort of correction, tends to give us kind of a skewed view of what is happening on the indices. You can see that happening in the US market as well. But again, the question to ask as an investor is, where is the money going? It doesn't necessarily mean there's a full-on correction or a crash happening. Money is flowing into other sectors, particularly healthcare and industrials.
On the other hand, Chinese stocks are up after fresh trade data. Does this show that Beijing maintains its position as a manufacturing powerhouse?
Absolutely. I don't think we can deny that given the numbers. And also looking at the Chinese index, despite the tariffs, despite the geopolitical situation, the index is holding firm. So yeah, absolutely, it can't be denied that where China sits in the bigger picture.
And investors are now turning their attention to the July jobs report over in the US. What are markets pricing in, and how could this potentially impact the Federal Reserve's next move?
I believe the expected number is 80,000, which will be up from the previous month, which shows that the US job market is stable. Of course, we would like to see that number increase. And then depending on what happens in September, I believe there's a 50-50 direction in which way that could go. And of course, then, the Fed will react accordingly. The one bit of advice I'd like to sort of hand out around job reports as an investor is, let it get factored into the market, let the market settle, and then more likely we'll see a continuation of the bull trend that we're in.
Zaheer Anwari in London, great to have your analysis. Thank you.
Thank you.